Yeah, I remember well the Monday after the war started. It was the 28th, a Saturday. Gold and silver were up. Gold got up to like 5,400, silver around 94, 95. And ever since then, it's been going down. And I remember oil as well. It didn't go up straight away to 100. It got stuck around 70, 75. But eventually, with the closure of the Strait of Hormuz and all the bombings of the Gulf bases that the U.S. has, like in UAE, Qatar, Bahrain, then oil and gas started going up a lot. And I think what's happened to gold and silver is that it's a combination of a couple of things. One is professional, like bank and hedge fund traders. They trade oil versus gold, right? So right now they're long oil, massively long oil, because there's a lot of volatility. And then they go short gold and silver. It's like a spread trading. That's what professional traders do. They never go long just oil. And I think that's impacted gold and silver.
The violent crash in silver is even more heavily manipulated. The massive drop isn't being driven by a lack of industrial demand. It is a highly engineered flush of leveraged traders, allowing the biggest commercial banks to quietly cover their massive short positions.
And I think the bullion banks, they always exploit an opportunity to make things move even more. So I think that's what's happened. I don't think gold and silver, or especially gold, is finished as a safe haven. It's been around for thousands of years. It's going to be around for another few thousand years as a store of value. But if you look at treasuries, government bonds, they haven't done well either. So they haven't acted as a safe haven. There's not really much that has acted as a safe haven. You could argue cash, I guess. But yeah, that's how I see it. And maybe there has been a little bit of liquidation by wealthy individuals, let's say, in the Gulf, like tax expats that are leaving Dubai and other places there. They might be selling some of their gold and moving to Hong Kong. But I've heard from Eric Young that a lot of these people are arriving in Hong Kong, and the first thing they're doing is buying back their gold. So that's what I see. And I spoke this morning about the topic, and I noted that silver is slightly down on the year, maybe 3 or 4%, but gold is still up on the year, while the stock market indices are down on the year. So I think that's what's going on. And also in 1973, when we had the oil embargo, OPEC oil embargo, gold and silver actually went down in the first month of the crisis. It was only later on that it started going up. Yeah, I think the reason silver hasn't acted as well as gold is because, first of all, it ran up a lot more than gold. And when precious metals correct, silver corrects a lot more. So it's normal. And I think Taylor's right about the fundamentals. It hasn't changed. And we're seeing the supply of registered inventory on COMEX continue to dwindle, and also in Shanghai there's not much silver left. So the fundamentals have changed, and I think unfortunately this war in Iran was expected to end in the first weekend, right? They were going to decapitate the Ayatollah, which they did, and then there was going to be regime change. And then on the Monday, the stock market would have been up, and Trump would have said, mission accomplished. But here we are a month later, and I don't think Iran has anything to lose except its existence. So it's gonna like stand its ground, and I think Russia and China are going to help, and they probably are helping Iran already, just like the United States and the West has been helping Ukraine. That war as well has been going on for over 4 years, And the reason I'm talking about the war is because wars are expensive and you need a lot of raw materials to fight wars, especially silver. And yeah, so if anything, the fundamentals are a lot better. And I do think I'm going to take a gamble here and say that we will see triple digit silver before the middle of the year, actually, I would say.
If the fundamentals for silver are so incredibly bullish, why did the paper price just crash? Innecco explains that Wall Street hedge funds are blindly executing automated spread trades, heavily shorting precious metals, simply to offset their massive long positions in oil.
One thing about the Strait of Hormuz, because we hear from the Western side and mainstream side that it's shut, but it's actually not shut. It's open as long as you pay a toll, and that toll is paid in yuan. And they also accept USDT through the Tron network, which is a cryptocurrency, which is interesting. So, but that's outside the SWIFT system. So that is the problem. So the Strait of Hormuz is open as long as you play by Iran's rules. And I think even Lloyd's of London, they've lowered the rates for ensuring passage through the strait if you play along with Iran.
Yes, that is interesting and important to note. Now, I want to talk about perhaps one of the most blatant examples of insider trading by the political class. In recent history, at least 6 million barrels of Brent and WTI oil were sold minutes before Trump posted on social media that the U.S. had very good peace talks with Iran, a claim the Iranians said that never happened. Now, at this point, law and order is completely out the window. I think that's largely because the U.S. as the global hegemon has now completely thrown international law into the dustbin. And so we're kind of in this world where the global superpower is no longer following the law. Why should anybody follow the law? It doesn't even matter. I'm sure there'll be no real investigation into this, but another example, of course, of the political elite, the top 1% inflating their wealth at the expense of everybody else.
Well, I think so. It's difficult to prove. Actually, it's not difficult to prove because I worked in the futures market for 20 years, and the trade was put in the futures market because it was before the regular market opened in the U.S. So it would be very easy to find out who put the trade on, because the exchange would go to the broker that put the trade on, because the electronic systems, the brokers are set up with the exchange, and then the regular CFTC would go to the CME, the exchange where it was put on, and say who put that trade on. And they'd say, well, bank X or broker X. And they go to the bank and say, who was the client that put that on? So it'd be really easy to find. But as Taylor said, international law doesn't exist anymore. But not only that, a domestic law in the U.S., the rules don't exist anymore. And we've known for years, I've known for years that precious metals, for example, have been manipulated for over 20 years. I've been following it, and nothing's done. So I'm sure nothing's going to be done in regards to what happened, I think it was on Monday this week. What that means, I think, for the overall system is that, unfortunately, the United States, which up until recently was AAA rated by all major agencies, is now not anymore. And when you don't have the rule of law in the markets, that means you're becoming more and more like a banana republic, third world country. And I'm not saying other countries are better. They're probably just as bad or worse. So that leaves us with hard assets outside the system. That's why I'm still really bullish gold and silver. And yes, it's frustrating, but I think patience will be rewarded.
And for me, it's really simple. Remove wealth from counterparty risk. Forget all of everything about owning gold and silver in terms of store of value and, protection against currency debasement and inflation. All of that makes sense. But don't, like, I think the easiest way to present it is, don't you want some portion of your wealth to be outside of the hands of a counterparty, in this case, a bank, financial intermediary, the government itself, when you're holding fiat currency, because it's trust in the government that adds value to it. So work to be done, but I think we are seeing slowly people catch on.
With the rule of law completely breaking down, retail investors are sitting ducks. Innecco warns that the absolute most important reason to own physical gold and silver today isn't just inflation protection. It is entirely about escaping the trap of counterparty risk.
Ever since they made gold legal again in the US on January 1st, 1975, they've had to keep it speculative to discourage people. You know, just like I'm sure millions of people are not going to buy gold now because of what happened this year. You know, gold went to 5,600 and it dropped to 4,100. They're going to be too scared. And that's part of the spiel that the bankers play. But over the long term, if you hold on and you try to dollar cost average as best as possible, you're going to be fine. Yes, it's tough going through these ups and downs. As for Alan Greenspan, I know he's a central banker, and I'm against central banking, but there was a time where he wasn't. Back in 1966, he was a disciple of Ayn Rand. He was a libertarian, and
I did not know that.
Yeah, he wrote an essay called "Golden Economic Freedom," and he noted that statists, you know, big government people, hate gold because it puts a straitjacket on them. You know, a system based on sound money. The only way governments can spend more than they should is through taxation, and you tax people too much, they rebel. But when you have a fiat currency system, you know, they fool people, and they do what they've been doing for the last 50 years, you know, like Taylor was talking about in the Rothbard book. And Greenspan warned us about that, and I'm thankful to him for that, even though he turned to the dark side, if you want to call it.